ahead and get this call started this evening. Now, as you log on, and what I really want you guys to understand um, is affirmations, mindset. Your mindset is very critical. Your mindset to your skill set, your mindset to your development, your mindset to you launching forward. And that's very critical. And so tonight, what we're going to do is this is really going to be like a part two to last week's call. So if you did not have an opportunity to watch last week's, then you definitely want to make sure that you actually go ahead and do that. Now, let me see. Good evening, Akron, Chicago. Good evening. Good evening. So continue to log on as you continue to log on. Good evening, Jacksonville. As you continue to log on, just drop it in the chat. Now, let's begin here with this foundation because, this is still January. And here this month, we're talking about the year of transformation. This is the year of transformation. And that's I want you to understand how powerful that declaration is. Okay. I really want you to understand how powerful that is. And so where we begin is the right thought process and the right mindset. Now, now where does that mean? And I love this. I'm about to read the affirmations and then it just pops up and it's like, hey, I am a billionaire. I am the signal. So that's that mindset, right? That's that mindset. Good evening, Akron. Good evening, good evening, good evening. Good evening, good evening. So guys, yes, Chicago, just drop it in there. But that mindset, the fact that you can add to, you understand exactly what it is that you desire and you declare and you're willing to walk through that. And so you want to acknowledge, I am a BYOB master trader. I am the signal. All my trades and in profit, I am 777. Now, this is the thing. All right. This information is so powerful. Let me get a 555 in the chat if you actually caught our broadcast on Tuesday. Let me get a 555 in the chat. Good evening, Chicago. Let me get a 555 in the chat. There we go. So what that broadcast, Cleveland, good evening, what that broadcast really talked about and what that broadcast really was about is helping you understand the power of legacy, helping you understand the power of what is actually in your hands. I love it. So many of you all tuned in. We love you guys. And so this is not like anything that you've ever had your hands on before. That this is not what that is. This is not like anything you've ever experienced before. And so what would it be like if you, the person that you love, somebody that you care about, what would it be like if you were actually in a position and you actually were in a position to where you could actually put you and your family on the other side of money? Like, what would that feel like if you were the person that literally would be able to share with them and help them understand that they literally can put themselves in a position? And so, yes, right, I'm a billionaire. So that's right. That's right. And I also see you guys have added patience, profit, right? Patience, profit. So understanding that what we've done is we've launched this year out. So many of you all have actually gotten registered, but what we've done is we've launched this year out is we actually rolled out a BYOB Production Squad 21-day e-coaching action plan. And with that plan, it's for you. Like, that is for you. It was extended All right, all right. Okay, so we're gonna try this one more time. So we're definitely going to try this one more time. Yeah, I love Zoom. You have to love technology. And so it just kicks me out and I jump right back in. And I see, look, you guys are funny talking about she'll be right back after these messages, we'll be right back. You guys are funny. So, all right. So let's try this one more time.
Hey there, it's Chanel Cooper Sykes, and I am on the beautiful beach of the Bahamas. And I thought it was just a fitting time to do a testimony video for my longtime mentor and friend, Mr. C. Thomas Gambrell. I am taking a vacation right now, literally while I'm still working, while my business is operating on the internet right now. I am a life coach, I'm an author, and I have created an online business where I'm able to sell my digital products and classes to the world and generate a very nice income while having the time freedom to do things like the beach. And if it wasn't for Mr. C. Thomas Gambrell really teaching me and training me how to set up my business and how to have the posture of an entrepreneur and teaching me the systems and the tools that create the results that allow me to do this, if it wasn't for him, I probably would be sitting behind the cubicle right now or working at the mall somewhere. But instead, I have a seven-figure online business, and I get to teach and train and coach people all over the world, how to live an extraordinary life. And it's been a very rewarding and fulfilling journey. He has definitely been a valuable asset to my life and to my business. And whoever's watching this right now, I want to just let you know that I vouch for this man 110%. He knows what he's talking about, he knows what he's doing. And it's not just from a standpoint of knowing the information, he knows how to deliver and produce results. So thank you so much to C. Thomas to sowing the seed in my life, and really, giving me the opportunity to learn and to grow and to sit at your feet and to be able to use the information that you have to build a business for myself. So thank you, and thank you so much for watching. Make it happen.
Now, wow. So just think about it for just a moment as we gear up here for this evening. Let's just think about it for just a moment. I mean, seriously, you actually have the opportunity right now where your friend, your neighbor, your relative, someone that you actually care about, really the narrative can be changed and can be shifted in their lives. I mean, that's the ultimate goal. So we're in a new year, the year of transformation, and 2020 actually showed us and taught us that we have to be poised in position to where we are ultimately going to take control of our lives. And so that's what that's all about. And you can definitely go ahead and get registered. Make sure you get registered at BeYourOwnBankMovement.com. You do not want to miss this opportunity. So just go ahead and get registered at BeYourOwnBankMovement.com. But as we dive in here this evening, I see a few more of you all. Welcome, Michigan. Welcome, 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 New York. So welcome, welcome, welcome. So now as we dive in here this evening, I definitely, if this is your first time with us this evening, let me get a 111 in the chat. Your first time here with us this evening, let me get a 111 in the chat. And if you're still learning how to cash out, let me get a 222. Welcome back. Welcome, welcome, welcome back. Welcome, welcome back, each and every last one of you all. And so tonight, this is BYOB Market Talks. And Tuesday nights are the nights that we dive down and dig into the basics, really helping you understand the strategy. And so tonight is the night where we dive in and we help you utilize the tools that you have access to, helping you understand the market, allowing you to learn how to allow the market to speak to you, and also allow you to position yourself where you're definitely going to be able to utilize the tools. Now, what we did last week was help you understand the big picture of the market, okay? And understanding the big picture of the market, and of course, the BYOB cash out strategy. And so if I'm looking here at this trade right now, this Euro USD, This is the one that I'm going to analyze first. This is the one that we're going to talk about, but big picture last week, understanding the very big picture of the market. And this week, we're going to talk about entering the trades. Okay. Now, there are different ways we can do that. But what I'm going to do first is I'm going to recap. I'm going to make sure you understand the BYOB cash out strategy. Okay. Making sure you really understand the strategy and the simplicity of the strategy. So, this is where we all begin from. We all begin here on the 15-minute chart. Okay, this is where we all begin, and understanding that this is where we begin. All right, you see, I already have it marked up just a little bit, so kind of not pay attention to that if you can, because I'm actually going to use this chart here coming up in a few minutes. But now we start here, but you don't stay there. So I'm gonna show you where we start, but I'm gonna explain to you why you don't stay there. Now, if you're looking for 10 pips, 10 pips and cash out, that's what you're looking for. That is definitely what you're going to be able to accomplish, right? And this is something else I want you to understand. As we look at this, let me back up just a minute. As we look at this, okay, and I'm gonna give you this, and some of you guys will be like, "What? I don't believe it. I don't believe it." But this actually has moved up. Just kind of looking at this. This has actually gone up about let's just say about 100 pips, because it's a little bit over. You guys know you have what's called pip reaction time and everything else, but the totality of the movement is about 100 pips. Now, you could have taken all of that, or you could have taken 10 pips. This is where, it was in the chat. I love it. It's actually on somebody's vision board. So that means that that statement is powerful, and it's really shifted things for you. Patience, patience, profit, and understanding your personal trade plan, your risk management, and all of that. Okay. That's what's important, because you can actually, right? You can actually obtain 10 pips, a few trades a day, if you operate with proper risk management, you operate with proper mindset and a proper trade plan. Doing 2-3 trades a day, you can be significantly profitable and obtain the wealth that you desire through compounding and everything else when you're taking proper trades, as opposed to trying to force trades, and then you're taking so many trades a day because you're trying to get those 200 pips, or that's your goal, but you're not taking them properly, or you're not compounding, or you're not doing any of those things. So that person that's doing one trade at 10 pips might have more profit than the person doing 20 trades, because of the simple fact of that discipline and what you're looking for is there. And so it's nothing wrong with being a super scalper. It's nothing wrong with taking 20 trades a day. The emphasis I'm getting to you right now is mindset development. That's key, mindset development. Okay. Now, now so this is what we looked at. Now let's go down here and let's drop down to the 15-minute chart. All right. Let's drop down to the 15-minute chart. So here I am. What I'm looking at is the stochastic first. Okay. The stochastic. So now you guys should definitely be aware. You know what? The stochastic is in my mind. I hear it all the time. The strategy. You should feel the strategy. You should allow the market to speak to you with the strategy. BYOB cash out. Like you should be able to vibe with the strategy. That's like what you should be able to do. And so that's the point you want to be at. And so when you're looking at this, the stochastic, I'm looking at the 20 and I'm looking at the 80. I'm looking at the 20 and I'm looking at the 80. And as I look at that, I'm looking, if I'm here around the 20, okay, here around the 20, is the blue line cross over the red. Blue line cross over the red in an upward momentum, okay? Blue line cross over the red in an upward momentum. So that's down here, right? That's down here. And then of course, I need that around at 20, I need that crossover. Like I need this to be moving up. And then of course, when I'm here, you see I'm around the 80, that means I'm looking for a sell. That's where you start first, okay? That's ultimately where you start first. And then of course, when I'm here, when I'm looking for this buy, I need a green candle with a flat bottom, and then of course the PSR flip to the bottom. Now, these are Hikinashi candles. So these are actual trend candles, all right? These are trend candles. Now, the PSR flip, that PSR is a parabolic stop and reverse. So understand that this is price action with a twist, because price action, you understand there are three areas of value. You have your moving average, that's in the stochastic. You have your trends. So, right, but you see we can draw trend lines as well, but these are trend candles. And then, okay, let me, you had me thinking like, whoa, I thought the kids were in the bed. Um, so let me see. So now right here, the PSR. So the PSR is that trailing stop loss, okay? The PSR is definitely that trailing stop loss. And so that's support and resistance. And so basically, this is like a dynamic support and resistance, because it's not, you look at it, it's not that traditional, the major ones that's on so that's not it. So you see that these actually travel with the candles, and so that's what makes them significant, because the market's telling you where your support and resistance is. So let me start with the stop loss, because the stop loss is always going to go above or below the PSR, not on the PSR, the same way we don't put it on the support and resistance line. You'll, like, if you were trading any other way, you would definitely put that stop loss above, right? You would not put that stop loss on your support and resistance line. Same reason why it does not go on your PSR, right? That's the exact same reason why it does not go on there. Now, also, when I'm looking at that, you see, I have this in alignment, and what I'm doing is I want to do my time frame confluence. I need to check my time frame confluence. So I need to check the hour. Now, when I check the hour, it has to look like it's going into a buy. So let me back up just a minute, because I cannot tell you how many times I get messaged about that statement, it needs to look like. Let's come back over here to the 15-minute. When you have the blue line cross over the red, okay? You have the blue line cross over the red right here. Does this look ready at all? All right, so I'm gonna remove that and I'm gonna move it to the side so you can see, because of course it covers that wick up. Does this look ready? Does this candle right here look ready? It has a wick at the bottom. If I make this bigger, you'll see the wick. This has a wick at the bottom. There is no flat bottom. Regardless, there's a wick there. So there is no flat bottom right here. So what this is a trade that's setting up. It's a trade that looks like it's about to manifest. So don't overthink it. Don't overthink it, because there is literally no difference on the higher time frame. So when you come to the higher time frame and you say it needs to look like a trade is setting up, that's what it means. And it needs to look like a trade is setting up. So it's the same thought process, it's the same mindset. It's just that when you guys go to the higher time frames, you start really analyzing it deeper. But the difference is on the 15-minute, I cannot take the trade from the 15-minute. I cannot take the trade from the 15-minute unless everything is in alignment on the 15-minute, right? So everything needs to be in alignment on the 15, but not on the higher time frame. Obviously, right here it is, because that's a correction, but it doesn't have to be, right? It doesn't have to be. So you gonna cash out on what we're training on? No, I'm just playing. So, but that's good, because always if there's an opportunity, you take that profit. So now is here. Now I need to drop down to the 5-minute, and this is where understanding comes in today. This is from last week to today. When I drop down to the 5-minute, it needs to still be buying. Your 5-minute is that when I say a tighter entry, that's what the 5-minute is. The 5-minute is a tighter entry, okay? That 5-minute is a tighter entry. And understanding that 5-minute is a tighter entry, okay? That 5-minute is a tighter entry. What you're looking for, you can see that I can use that as, I can either trade there, like from the 15, or I can, use it as that entry point, because I know where I'm at in the market. And that's why so many of these triggers come in on the 5-minute. This is why so many triggers come in on the 5 minute. I mean, just look at how many triggers have come in on the 5 minute. So you notice when you open a Vibrata, now we get other ones. I can take these off. You know, you have them on a higher time frame as well. It'll update here in just a second, but you have them on a higher time frame as well. And so you can see that, but it's been 3 hours, almost 3.5 hours since one was called, you know. And then of course, if I do the 15, you'll see, let it refresh. You can see that they come as well, but it was almost 30 minutes ago. Then it was almost, you know, like around an hour and a half and almost 2 hours. So, you know, you can see that they take a little longer, but when I have that 5 minute, they flood the chat all day. They flood the vibrato all day. And that's what tonight is about, because they're not signals, okay? They're not signals. Now, that's the strategy, and this is the understanding. So let me come here because I need you guys to understand market orders first. So let me come here. Now, I mentioned that there are different types, okay? I mentioned that there are actually different types of orders, okay? There are different types. So different ways. Let me see. I have a question. When I get an alert from the Vibrata, is the call price the price you, we're going to get into that. But yes, the call price, and I wouldn't say the entry point like that. It's the trigger, is where it triggered. And so you can use the call price, but it's really where it triggered. But I don't want you to like think about it like that from that perspective, because I want you to understand why you take the trade. All right. I really need you to understand why you take the trade. And so that's really that focus where we're getting into tonight, is for you to understand when you get that alert, how you actually take the trade. And so that's really what this is all about. All right. Now, we already know market execution. All right. We already know market execution. Now, with market execution, you just push the button and go. It's just like, oh, I got to consider my pip reaction time. I have to consider so many different things. I just push that button and go. So market execution is not on here. That's how we always, that's our foundation of trading. Push the button, just push the button. You've heard me say, push the button. Don't be scared of the button, push the button. Well, that's the reality, just push the button. Now, but you have other orders that you can utilize. And what those orders are is my buy stop, my sell stop, my buy limit, and my sell limit. Now, I don't want you to focus on stop and limit. I want you to know what they are, but don't try to make it make sense. Like, so for example, when I say stop loss, what does that mean? It stops the loss. But a buy stop, you wouldn't think it'd be a stop. So think about it like it's a buy go or a sell go, or it's a stop sign that you get to and you analyze, like I have to get to this stop sign before I can push through and keep going. So kind of think about it some other way to make it make sense to you. I mean, seriously, I understand. I get you guys reach out, you ask the questions. When I was taking my licenses exams, this was a part of it. And it wasn't until I started trading that it started to make sense, because just trying to think about, oh, buy stop, buy limit, you know, that is just not going to make sense. Okay. So don't try to apply the name to what it does, but you need to know the name to know what it is. These are stop orders and they're limit orders. All right. So when you have your buy stop, so when you're looking at the market, okay, basically what you're saying, like you'll see us say, when the market gets here, when it breaks this zone, when it gets to that point, you've heard us say that on the call several times. When it gets here, when it does this, when it does that, when it gets to this point, then you take the trade. All right. When it breaks through that zone, and you can take the trade. Well, that would be a stop order. All right. So the order is placed above. For a buy stop, the order is placed above the price. Okay. It's placed above that price. And then that price is going to keep going, like you want it to keep going. And that sell stop is the order is placed below. So is above or below the price. And it can kind of correlate with the question that I just got asked. That's why I kind of redirected you to what we're talking about. And you know, when I should get back on the chart. So you don't want to put your buy on that call price if I'm going to do a buy stop or a sell stop. And I'll show you why, because you want it to pass that zone. Remember, a support and resistance line is is not a definitive line in the market, but it is definitely a line. It's a price. It's at a price that has significant impact. But just think about it. If I'm doing something, do I ever stop in the same place on the exact same line at the same time? You might always be in that area, but you don't always hit the same spot. And so just kind of think about it like that. Now, a buy limit means, like I expect this to, I know it's going to go up here, but I expect it to turn around and come back down or go back up. Or a sell limit is I expect it to come to, I expect it to go up to a certain spot, and then I expect it to turn back around. You'll typically see those like in ranges and, things of that nature, or you get to the trend line, or, somewhere in there. That's where you'll definitely see those. So here are a few examples. So when I'm looking at my buy stop, so for example, just picture this being that 5-minute chart. And we know for a fact that this is above that zone. So my buy stop is going to be triggered, yes, continuation, absolutely. So that buy stop is going to be triggered, here, like it's going to be triggered here. So just like what the question is it like a continuation? So absolutely. So you see this, you'll have that impulse, correction, continuation, correction, and you see it had a little sloppy price action, but it was that impulse, correction, and then when it bounced off, that continuation. And so what'll happen is sometimes you'll get that correction and then it'll go into that continuation. So that's what happened. That's what a buy stop is, okay? So it is definitely that continuation. So that's why I said, why would they call it a stop? Why not a buy go? Or, something else you guys might come up with. So it's not stop, like we're not going to go. It's just like when it gets to this stopping point, when it gets to this point, and it gets to this stop sign, when you get to a stop sign, you got to stop, then you go. So however you have to make it make sense to you, that's what you need to do. So now this is a sell stop, right? This is that sell stop. So when you're looking here and you see that sell stop, it's the same thing. So use that example in the chat. I have my impulse, correction, continuation, correction, continuation. You see how it bounced back up, came down. So that's just an example, but you can see, so my sell stop is going to be placed below that, right? It's placed below that in order for me, like, you know what? I'm going to keep going. This is what I need to do. All right. On those two orders, do I have any questions or comments? Any questions or comments? Any questions or comments? No, it's not to take profit. No. It is not to take profit. And that's why I said, don't try to think about it, with the name, because that would definitely make sense, but it's not the take profit. So this is actually how you enter the trade. So instead of hitting market execution, this is actually how you would enter the trade. So, if you look at on your MetaTrader 4, if you look and you see that there are different drop downs, when you look on that MetaTrader 4, like where you see market execution, if you tap that, there's a selection that you can actually choose from. So you'll have the default is market execution. So that's the default. I'll get to that when I go back to the charts. So that is that's the default. No, this is on your phone. I'm talking about MetaTrader 4. Pick your phone up right now. Go to, like, you're gonna hit where it says market execution, when it says market execution, to hit that, it's a drop down menu. Now, I don't know about you Androids. So if it's different, but I know they place orders too. So for clarity, is it like placing a trade in advance? Absolutely. Absolutely. It is like placing a trade in advance based on analyzation, but you're actually not in a trade. So let's say, for example, let's say this hit here. You see how it retested, came back up here? It comes down here. Now let's say it just kept going up. Let's just say it just went up and it never turned around. It never continued. Let's say this was a turnaround point. You would never be in a trade. You would not be in a trade. So, you know, you definitely would not be in a trade because it never triggered, it never hit this price. You will not be in a trade until you hit that price. You will not be in a trade until you hit that price. All right. So does that okay, great. So and yeah, so the other question, like I said, with the Vibrata and the MetaTrader 4 price, when we get back to the charts, I will don't let me forget though. I'll come back to that. Now this is that buy limit and sell limit. Okay. So now this is a range. Okay. You see, this is a range. So the market does what? It goes up, it goes sideways, and it goes down. It goes up, it goes sideways, and it goes down. It goes sideways, up, sideways, down. That's what the market does. I mean, that's it. So it's either going to be buying, it's going to be selling, or it's going to be moving sideways. And when I say sideways, I'm not talking about consolidation. Okay. Consolidation is where the market's not moving. And we see that a lot, you know, based on the type of market conditions that we've had. So we've definitely seen that a lot. Absolutely. Yes. Please put that in your demo first. So now here, when I'm looking at this, okay, when I see this, now this is what a range is. So, you know, in a range, the market's going to go up, it's going to come down, it's going to go up, it's going to come down, it's going to go up until it breaks out of that range. Okay. So that's, you know, remember the market does not do little pretty curves and just, oh, I'm going up and I'm just going to turn around, right? The market does not do that. So knowing that the market does not do that, you know, this it goes into a range sometimes before, or even it'll go in a range and then continue going up, or it'll go in a range and turn around and go back into a sell. So sometimes the market just goes into a range, and that's, you know, that's just based on the conditions of the market. But you just need to know how to trade it. So now this is what a sell limit does. So if I was in a buy, if I was in a trend, then when it would break through here. Where's my mouse? Here we go. It will break through here. It will retest and keep going. So it will hit this point, correct, break through, retest, and keep going. That's how it typically works. Okay. So what a sell limit is, and once again, don't ask me why they call it a limit order. You know, maybe Dr. Bife would know the rhyme or reason behind it. But you know, when you're looking here, what it's going to do is it's going to come up. And what it does is you have an expectation for it to stay in that range. Or so I'm gonna use as the range as an example. You have an expectation for it to stay in that range. Like that's the expectation. Okay. Now, understanding that's the expectation, you still don't want to get in a trade before it starts selling. Like I don't want to press sell here and it's keep going up. So what you're doing is you're looking at that support resistance line, and that's where you will place a limit order. Okay. So if I'm expecting it to hit this point, I'm expecting it to hit this point and turn back around. Now that's where I'll place my limit orders. So my limit order says, I expect you to sell. I know we're buying right now, but I expect you to turn around and come down for a sell. So I expect you to stay in this range. I expect you to stay in this momentum. That's what a limit order is. So now, all right, that's exactly what a limit order is. So no, I think I said that in the very beginning. So let me clarify that. A consolidated market we don't touch. Consolidation means indecision. A range is a lot wider. A range has opportunity in it, right? Consolidation we don't touch. So if I see it when we get back on the chart, I'll show you the difference. But yeah, so yes, they both go sideways, but you see the range. Look at the range. Now look at this right here. This will be considered some consolidation. So yes, some consolidation happened during this trade. However, this is a range, right? This is consolidation. It's a big difference. This is indecision right here. So now for a buy limit, you expect it. You see how it hit this support line? It hit this support line. So a stop order means I expect it to keep selling. So that stop order would come down here somewhere, meaning it will keep selling. It will keep coming down. But a limit order means it comes down and I have an expectation for it to go back up. Okay. So you see, how it broke that support line, or it tapped the support line and then it turned around. So your limit order would be at this price. So it would be at this price, meaning that, if I'm looking at this and I know I've been in a range, I could set a limit order. I could set a limit order, meaning that your trade, you would not get into the trade until it touched that support line, turned around and came back. So now, if it doesn't, like for example, let's say this one never touched the support line, you would never enter the trade. You would never enter the trade. So this one, you would have never gotten a trade. So once again, we don't operate from our, oops, I missed it. It just never came down and touched that support line. So because I set a limit order, that means it has to come down to that support line and then it'll come back up. So do I have any questions on limit orders? Any questions or comments on limit orders? No questions, no comments. That means you guys got it. So now, for those of you all who have never hit that drop down menu, because I can tell some of you have never done that because you're asking, is this on the computer? Is this on, I can't do this on my phone, or, a few of those questions that I just got in there. So I'm glad I covered that. So because I need you guys to know that, yes, that's on your phone. I need you to know that, yes, you need to hit that drop down menu, right? I need you guys to know that that's what you need to do. So, right. What if it doesn't hit it, you say if it doesn't hit it, money will be lost. Is that what you're saying? Or no, money, you're not in a trade. You're not in a trade. You would never have gotten in that trade. So let me come up for a minute. So no money lost. You just would have not taken a trade. So let's see here. Which one did we know was, and then I'm gonna come back over there. So that's obviously a trend. So nope, that's not it. Which one was it? Here, perfect, gold. Okay. You see how gold is moving sideways? So what did it do? So what did gold do? Look at this. Gold had been moving up. Of course, we had a nice, now I'm using this as an example because I know this one has more volatility than some of the other currency pairs and things that we trade. But for the sake of time, I'm gonna talk about gold. I'm just use it as an example. So you see that's up, right? That's an uptrend. We don't have a beautiful impulse correction continuation because it's gold. Now, but this is a range. This is a range. Now, you have to have an order. You will have an order. If it doesn't hit, you won't be in a position. Correct. Absolutely correct. So this is like I said, this is gold, right? Or this is a range. So in here, so your limit orders would literally be here. So you would have a limit order here. You would have a limit order here. So you see where that arrow is? Let's get this other arrow. You would have a limit order here, okay? So if I'm expecting it, now we haven't analyzed this. So let me be clear, right? For the sake of time, we're using gold. We haven't analyzed this. So, we haven't analyzed it, but this will be a limit order. Right, it's a different language. So that's why I said don't get caught up. That's why I said that up front, because everybody does that. Do not get caught up with trying to figure out, why it's named that. Just understand what it does, right? So that's where that comes in, because I can't tell you so I know what it is like with trading, because I can't tell you how many of us studying and getting our licenses exam when I was doing my Series 6 and everything, because this is in there. So I can't tell you how many people are sitting there trying to figure it out and make it make sense, because it doesn't make sense. But when you come here and you start applying it on the charts, that's when you'll begin to understand it. That's when it'll begin to make sense to you, and not make sense like why it's named that, but just make sense of how you place the orders, because now I can tell you what a limit order is, and I know it like the back of my hand. But when I was trying to, just memorize it, it won't make sense to you. So you have to get in there and play with it. Like you just, that application is what's going to make it make sense to you. So this is that limit order. This is that limit order. So this is where it would be. This is where it would be because this is a range. Okay, this is a range. Now, consolidation is something totally different. This is like consolidated, even though it's moving up a little bit. It's real nasty, real choppy. So that's what consolidation would look like. This is more of a range over here. All right. So like I said, we didn't analyze this one because I want to get back to those entry points. And if we have to do a part 3, then we will, because I want you all to make sure that you understand this. All right. So let's see. Let's go back over here. So now here, so what I looked at was on the 5-minute Euro AUD, on the 5-minute, and on the 5-minute, it was 156. Let me just take these off so I know which one is which. All right, so let's see here. 156, 759. All right, so that's where the trigger was. And it happened on the 5-minute, and it happened at it happened here. So let me get this. Actually, let me do it like this. No, actually it was going for a buy. So I had it right. I had it right. All right, so this is where that trigger was, okay? This is where that trigger was. So now, understand, let me go back just a little bit, okay? Let me go back just a little bit. So, understanding the big picture of the market, okay? Big picture. Where we at? So you notice on the calls in the morning where we're showing you the application, you notice on the calls in the morning that we'll look here on a 5-minute, the 30-minute is my confluence. So sometimes you'll see I sit on the 30-minute chart because that's where the confluence is for the 5-minute. Then we'll come up here and we'll look at the higher time frames to see exactly what the market is doing. And so looking at the higher time frames, because the higher time frames is the direction of the market. My lower time frames are my actual price and my entry point. Okay, that's my actual price and my entry point. So now I know what the market is doing. I know the big picture of the market. All right, I know that big picture of the market. So when I come back down here to the 5-minute, okay, this was triggered for a buy. Okay, this was triggered for a buy. So we know that we're in a buy. The Vibrata triggered it for a buy. Okay, Vibrata triggered it for a buy. Knowing that the Vibrata triggered it for a buy right here at this price and this time. You notice when you get these triggers, that's why I always tell you guys they're not alerts. When you get these triggers, they'll give you a call price and it'll give you a time. Okay, it'll give you a call price and it'll give you a time. It's going to give you the UTC time and the local time. Now, understanding this, okay, so you can kind of gauge and see how long ago it was. So understanding this, I already know on a higher time frame, I'm buying, okay? Now, just in this little area right here, I cannot see, in this little area right here, you cannot see all of that activity that's happening on a 5-minute. You cannot see it. You're never going to see it, all right? But when I come down here, this is the actual price. This is the actual activity. You do not want to attempt to, quote unquote, trade off the 5-minute, right? You want to know, so when we pull it, what you're seeing us do in the morning is kind of an inverse, like a vice versa, where because the trigger happens, the Vibrata does the heavy lifting for you. The trigger happens, and then when that trigger happens, now I still need to know where I'm at in the market. The trigger happened, but I need to know where I'm at in the market. And that's what this is doing. And so now you're seeing all the activity. This is the activity. This is where the actual price is. So this is that trigger price. So going back to the question, okay, of pretty much, do I put my price, my buy stop at the call price? Is that where I enter? No, it's not. Now, if I'm doing a market execution, if it aligns up, then absolutely. So you can see that this was definitely would have been a continuation. And so that's why I said we'll do another one. We'll add a part 3 to this if we have to, because you can see, you know, if I'm looking at my stochastic, how my stochastic is all the way up here. And some of you all will always, it's always somebody on the calls that'll tell me, well, the stochastic's not at the 20. Why would we be taking a buy? Well, because I need to know, we need to jump in, we need to see what's happening on a higher time frame. When you begin understanding how to analyze the higher time frames, you see that the stochastic is lining up on a time frame. It's just not lining up on this time frame. But it's still buying. It's a continuation. And so that's where you'll really be able to begin to understand that. But here, looking here, all right, looking here. So I have to pass all of this, you know, for my order. So if I'm going to do a buy order, right, that's buy stop, you know, if I'm going to do that stop order, I need to bypass all of this before I put that trade in. All right. So my buy stop is going to be above this. That's where my buy stop is going to be, because a buy stop means I'm not holding my phone. A buy stop means I'm not sitting there looking at it. Okay. That's what a buy stop means. If you know, we start here on a 15-minute chart. You know what, I have entered the trade right there from the 15-minute. You would already been trying to look and get in that trade. You technically would have got in the trade over here. All right, that's where you would have gotten a trade. But when we're looking at the trigger, I can analyze and I can do all of these other things, and you can see now what I really down. Let's break this down, because we would have gotten in a trade on the 15 right here. So let's break this down, because this is called in a correction. So you see, this is where it triggered. We know why it triggered for a buy. We have to allow the correction to play out. And when that correction plays out, look where we are. Okay, look where we are when that correction plays out. So of course, I can't find what I'm looking for. So look where that correction is when it plays out, right? Look where we're at. So where are you getting in a trade? This is where we are on the 15-minute, right? This is the 15-minute. So when I do my, when I'm here, I got my blue line cross over the red and an upward momentum. We already know it's a continuation. So that's that correction. So when we're here, and I have it really big for you because I want everybody to see all the details. So when I come here, you know, what happens? So now it's going sideways because we still have that momentum going up. So technically, if you're looking at this from that perspective, you can see where that stochastic started curving back up. So yes, even though we're in that overbought territory, you know, that comes with the advancement of the skill set. But I'm trying to show you it's still what we do when we do the market execution. So you would not enter that trade until we got to this point right here, which is above all those wicks and everything on that 5-minute. So you see how it triggers? I would not enter the trade until everything aligned up on the 15-minute. The difference with the buy stop, right? The difference with the buy stop and the sell stop is I'm not looking at my phone. I do an analyzation. I'm waiting on it. I can put my phone down. I don't have to sit there and stare at the computer. So you can either wait and do your market execution, or you can do a buy order or something and allow it to hit. And then you said you'll take profit for 10 pips, or you said you'll take profit to the next support and resistance line. So that still plays out. So you got your 10 pips or you got your support and resistance. So now to answer that question about the broker, because that is very important. So you were thinking ahead of me, but this is where it comes into effect. Depending on who your broker is, okay? Depending on who your broker is, you know, depending on who your brokers is, right here. All right, when I look here, okay, when I look here, like let's say we would have been looking at this above here, and because this wouldn't have hit right here yet. So we're a little bit above here. Now you can make it as far, just like the stop loss. I can make it, I can give it a little bit more cushion, okay? You can give it a little bit more cushion. I didn't have to put it right there. I could have cushioned it just a little bit to be on the safer side, right? You can cushion it, but as I'm looking here, let me widen this just a little bit. I want you to see it. Now you see that blue part? That's the actual price. This is the price. However, why is it a difference on your MetaTrader 4? because this does not have broker fees included. It doesn't. So when you see this, now I can tell you a lot of brokers, if the spreads are small, it's really not going to be that much of a difference. If I have low spreads, it's really not going to be that much of a difference, because if you look at this, you see that 9.6. So let's say if I was to go pull up Euro AUD right now, let me see here. So let me pull up my MetaTrader 4 and I go pull up Euro AUD. All right, so if I'm looking at mine right now, it says my spread is 2.7, 20, actually now it's 26, 27. So 27. So that would be, that includes that pipette, right? That includes that pipette. So if your phone, on your phone, your MetaTrader 4 should be on advanced. It should not be on simple. Okay, if you have an iPhone, it's real easy. Just slide it. And when you open it up, it says simple advanced. If you have an Android, I don't know what to tell you, because you got a little more work to do. You got to go into your settings and some other stuff. So, good luck finding it. Maybe somebody drop it in the chat, help you understand how to get there. My suggestion is you just get an iPhone. So, but you can see right here that, you put it on advanced. And when you put it on advanced, then you'll see, so what is that? Like that's 9.6. So if it's 9.6, right? If you're sitting there, you're looking, and it's a 9.6, which are the last. Now I know the pip is the 9. The pip is the 9. The pip is the 9. However, the spread includes the pipette. So technically your spread is only 2, almost 3 pips, right? So that's what it is. So your spread, your broker is going to include that spread. So the spread is only about technically almost 3 pips. So just keep that in mind. So your spread is not 27, because that includes the pipette. The reason why we have a pipette is for brokers. That's why we have a pipette. All right. That's why we have a pipette. Okay. So for clarity and understanding. So now I can tell you this based on your broker. When you're doing this on the indices, I've seen the indices with a significant difference sometimes. So do not blindly put it in there without analyzing it, okay? And I've seen from one broker to another, I've seen one broker almost spot on, and I've seen another broker where I'm like, whoa, these numbers don't match up at all. But that's not the Vibrata, it's not you, it's your broker. And so when you're selecting a broker, those are some of the things that you want to consider. All right, those are some of the things that you really, really want to consider. So now, based on what you saw, like I said, we can do a few more next week. We can dive in a little bit deeper, but I want to know, did this bring some clarity to you all? We have a few minutes for some questions. I just really want to make sure that you all understand why the 5-minute is so significant. This is why that 5-minute is so significant, and why so many trades are pulled off the 5-minute. That's why it's so significant, and that's why. And then of course, like I said, so awesome. So now, one of the things that you guys are so very welcome. Now, what'd you say you had? NZD-USD? This thing not playing out. Let me see. Now, I don't have time to really go through and analyze it, but you are very welcome. So, correct. That is correct. 5 minutes to 30 minutes for confluence, and a 15 to the hour. Now, don't forget that drop down. As you guys saw this morning, that kept us out of some trades. Don't forget the drop down, but that is correct for your confluence. This is clear. I learned a lot. Thank you. You're very welcome. So I don't know where you entered or what you were doing when you talk about these trades, but if you were looking at it for a sale, let's look at this. This is that big picture. When did you take it? This is in a nice buy. This has been in a buy. Now you had, of course, it dropped right here. But the big picture, this has been in a buy. All right. So even if I look at this one, which so I probably don't need to know your exact points, but the only time we spike down for a sale, okay, the only time we spike down for a sale, because we did not have a clear trend reversal, okay? Because we did not have a clear trend reversal, then the only thing you would have done is go to that first set of take profit, like that first set. And depending on where you got in, you know, I'm looking at this, I really can't see, we would have taken a sale here. Looking at my stochastic, I wouldn't have done anything right here, maybe right here, but even all of this was in a buy and then this was in a sell. So you definitely, if I'm looking at this on a higher time frame, you don't trade against the trend. So there is no trend that would tell me to go past my 10 pips and cash out. So I don't know where you would have jumped in this trade, but this is the only area where you had an opportunity for a sell. And it wasn't a long opportunity. So kind of go back and mark it up, put that support and resistance line on there and analyze it. So that you want to make sure on the 15-minute chart, you have that, blue line cross over the red, you want to make sure that you have those things, right? You definitely want to make sure, just like when we were on the other chart, you had that. So that would have worked out. That's exactly what I'm saying. This is the only opportunity you have. And it actually went down 30, 33, 34 pips. So you definitely had an opportunity for a sell, but it's how tight, where was your stop loss, and you didn't have more than one opportunity. You only have one opportunity for a sell right there. So let's come back over here. And so we can close out. I want to go ahead and close out because it's time to transition this call. But even so you see, the one thing I want to leave you with, so you guys can go practice and kind of walk through this, is that when I get my 5-minute trigger, it still aligns with my 15-minute trade, the basis of the 15-minute trade. So even if I'm doing my buy stop or my sell stop, it's still in alignment with the foundation of what you already learned. All right, it's still in alignment for that. So this is why when we say the Vibrata is a powerful tool, when you look at, when you really come back here and you look at this, come on today. When you come back over here and you look at this and you see this very first page where it says it enables you to trade like the banks from the comfort of your desktop or smartphone. I want to help you understand something as we transition. Big banks of the world, they utilize tools. Big banks of the world, they don't just blindly trade. They have systems in place. Okay, they have systems in place. So understand, this is your system that is going to allow you to trade like the big banks of the world. So if you put a blue arrow on a 5-minute, if I put a blue arrow on a 5-minute, then look at the 15 an hour, the blue line crossover. Well, you see that, so let me dive into that because it's time to transition this call. So, let me dive into that next week. But it's not about, it's still aligned. So there's really no difference, okay? It's still aligned. It's really no difference. So when I bypass this area right here, when I bypass this area right here, I'm still where I aligned on my 15-minute. So what you're doing is the 5-minute is literally just a tighter entry. That's what it is. It's literally just a tighter entry. And so that's what the Vibrata is triggering, because that's where most of the activity happens. So it's just literally a tighter entry. So, and awesome. Yes, stay plugged in. And then you say this is the last question. So the 5 and 15-minute indicators need to align to place an order. It depends on how you're trading. Remember, the 15-minute time frame confluence is the 5-minute. So if we're not doing anything extra, this is still the same. So if I trade off my 15-minute, my 5-minute has to have confluence. So my 5 minute is buying as well. So we're not doing anything new. The only change is how you enter the trade. You're not doing anything new. What happened tonight is you guys got a lot more clarity on why it triggers and how I can enter my trade, so you can know and have a really tight and a good entry point. That's really what we did tonight. Is instead of you just buy, sell, and then you have a 10 pip a 10 pip reaction time. So that's really what we did. Is really just we just zoomed in a little bit deeper, but nothing changed. So nothing changed. The buy and the sell, those stop orders will help your pip reaction time. But you needed to understand the market also, okay? The market also. And then for those of you all keep asking me about HFX, this is important. This is why we're building on this as well, because you need to understand this too in order to do that. So this is going to have your entry, and this is going to have your, your foundation a lot better. Like this is really going to have that, a whole lot tighter, because this is important for those trades as well, because they're all the same, except for this is 10 pips, and that's just, it need to close out in a certain amount of time. All right. And so we're gearing up, but I need you guys to understand the market. I need you all to understand how it works in the market. All right. And so from here, then we go there. But next week, we'll look at a few more examples. So go practice, practice, practice. Perfect practice makes perfect. Perfect practice makes perfect. So I really, really hope tonight brought a lot of clarity to you all. So that means I expect to see a lot more 777s in the chat. So yes, absolutely, you have to understand the market. So I expect to see a lot more 777s in the chat, from, many more of you. And I mean, this is just your year. This is your year of transformation. This is BYOB. So be your own bank, because we do mean literally. We mean literally. You have to create your own value and your own wealth. So I've enjoyed you all tonight. I want you all to have a blessed, weekend. However, don't go anywhere, because it is definitely time to transition this call. Now, what I'm going to do right now is I'm going to turn this call over to a gentleman that I have a tremendous amount of respect for. So the gentleman that I'm turning this call over to, he has